The Finance Committee meets this morning to discuss housing. This hearing comes at a time when Americans are getting clobbered by climbing rents and home prices, key drivers of inflation. Data released last week showed that rents increased in June at the fastest rate since 1986. Buying a home is getting more expensive. Many young people who have modest incomes or big student loan debt feel like the dream of home ownership has slipped out of their reach. The root cause is the United States isn't building enough housing. It's been that way for decades, and the shortage is affecting citizens and cities all over America. For example, my hometown of Portland has skyrocketing rents and low supply of suitable housing. It's also an issue, though, in Central Oregon, Southern Oregon, and Eastern Oregon, where they can't build enough housing fast enough to keep up with demand. I'd be willing to bet that every member on this panel is hearing the same story. Now, we're going to talk about a number of issues this morning, and I'd just like to raise a relatively new issue that deserves real scrutiny, and that is private equity firms and sophisticated companies armed with terabytes of housing data are hoovering up properties nationwide. They're jacking up rents. They're using algorithms to outbid Americans who just want to own a home. Why do these big guys want to get into our housing market? Because they're upward of 330 million in the country, and there aren't enough homes for all of them. Huge demand, limited supply. Typically, people on a budget are going to come out on the losing end of that sort of thing every time. The cost of housing is also pushed up by the snarls of state and local red tape. Zoning rules too often ban the kind of construction that's most needed and perpetuate segregation. In some places, it can take years of tireless work to get a ruling on permits and approval for new construction, and then you have the big upfront costs. Fortunately, my home state of Oregon is one of the states that's stepping up on this issue. Others need to do the same. It's also a fact that when housing costs go up, homelessness goes up. You can save a lot of individual suffering and taxpayer dollars tomorrow by building more affordable housing today. The bottom line when it comes to housing, the U.S. needs to build and then build some more. The Finance Committee plays an important role in helping get shovels in the ground. That's because much of housing policy deals with tax policy. I proposed the DASH Act, the Decent, Affordable, and Safe Housing for All bill. It's about getting help to the most vulnerable, children and families experiencing homelessness. It would also create a credit for more affordable rental units, boost LIHTC, low-income housing, and encourage the construction of more middle-income housing without taking a single penny away from LIHTC. Local officials in Oregon tell me they badly need more incentives to build housing for middle-class families. The Finance Committee has had a bipartisan coalition working on important housing issues for a long time. Senator Cantwell is very important. Dr. I think she'd agree, good lots more to do. There's another Improvement Act, which I'm proud to sponsor with Senator Young and one of our colleagues who's here, Senator Portman. That bill adds even more punch and even more flexibility to build even more housing, an estimated 2 million new units nationwide. Senator Cardin and Senator Portman have also proposed an important bill called the Neighborhood Homes Investment Act that'd be a big magnet for new affordable housing in struggling communities that very much need it. And finally, thanks to my seatmate here, Senator Crapo, we continue our bipartisan work with Senator Leahy, Senator Collins, and I authoring the Lifeline Act, Our bill creates more flexibility for states, local governments, and tribes to use existing funds to get more affordable housing built. With costs where they are today, the alternative is a whole lot of unfinished construction and plans that stall out before they get out of the gate. Finally, while there's bipartisan interest in getting this approach done legislatively, Treasury also has substantial authority to accomplish a lot of what we're seeking to do on their own with rule changes. So today we're going to make sure that the direction is getting the Congress and the Treasury Department to move more quickly together, and getting it done will provide important progress, again, in ensuring access to more opportunities for affordable housing. Lots of ideas to talk about. Every member of this committee has an interest in this, so I hope we won't be here eating our cereal tomorrow morning in the finance room, but I can tell you a lot of my colleagues have lots of interest. Look forward to our discussion, and I want to thank again Senator Crapo for his good work on another important issue.
Well, thank you, Senator Wyden, and I appreciate your holding this hearing as you are highlighting once again another of the bipartisan issue areas which we're building a strong record in this committee of working on.
Thank you.
And this is important. Last week, we learned that consumer price inflation spiked to 9.1%, the highest rate in more than 40 years. The shelter component of the consumer price index was up 5.6% in June relative to a year earlier, and rents were up by nearly 6%. To continue battling inflation, which was fueled by last year's partisan American Rescue Plan, the Federal Reserve must aggressively raise interest rates and may raise rates later this month by as much as a full percent. Inflation must be contained, or we run a risk of the Fed having to repeat what it did in late 1980 to combat runaway inflation. Painfully, then, overnight interest rates were driven to nearly 20%, which crushed economic activity, including housing markets, and helped lead to a deep and long recession. With higher interest rates set by the Fed, higher mortgage rates follow, making it all the more challenging for Americans to buy homes. Housing affordability is a critical issue in Idaho and all across the country. Nationwide, there is a shortage of about 7 million affordable rental homes available to lower-income Americans, and the gap between demand and supply increases each year. To provide more affordable housing, there are existing tools in the tax toolbox that provide incentives for builders to create more affordable homes. The Low-Income Housing Tax Credit, or LIHTC, for example, is responsible for generating a majority of all affordable rental housing created in the United States today, and generally enjoys bipartisan support in Congress. In Idaho, there are currently 284 LIHTC projects located across the state, providing 12,000 plus units. These projects vary in size and are split roughly between urban and rural, with about 72% targeted toward families and 28% for seniors and the elderly. One such project is the Valor Point Apartments in Boise, which targets chronically homeless veterans. Several members of this committee have been active in working to improve existing affordable housing credits and to create new incentives, and as I indicated, on a bipartisan basis. Senators Young and Cantwell, as well as several other members, introduced the Affordable Housing Credit Improvement Act, which would expand and strengthen LIHTC for developing and preserving affordable housing. Senators Portman and Cardin introduced the Neighborhood Homes Investment Act, which would create a federal tax credit that covers the cost difference between building or renovating a home in urban and rural areas. Numerous other Finance Committee members are also interested in finding affordable housing solutions, and I thank all of them for their work. With LIHTC, while LIHTC and other credits are a part of the solution to developing affordable housing, we must address other drivers that are increasing housing costs generally. Foremost in the current economy is the need to reduce inflation. Unfortunately, it's been allowed to run rampant, and necessary Federal Reserve actions will probably raise the cost of housing. Builders are also feeling inflation's effect through more expensive building materials, and painfully high fuel prices continue to put even more pressure on builders' budgets, making it even more expensive to get materials to the construction sites. Additionally, several economic factors have led to a shortage of affordable housing. One way to alleviate the shortage would be to look into more manufactured housing. During his time at HUD, former Secretary Carson created the Office of Innovation to evaluate new ways to provide housing, and in doing so, highlighted the improved efficiency and suitability of manufactured homes. Zoning laws and regulatory barriers, which are often uncoordinated, unnecessary, or overly cumbersome, also present challenges to affordable housing by creating excessive costs that restrain development of affordable housing. Many of the markets with the most severe shortages in affordable housing have the most restrictive state and local barriers to development. We must work to reduce regulatory barriers, which requires outside-the-box approaches, as well as teamwork from local, state, and federal governments and the private sector. This includes initiatives like opportunity zones that were part of the Tax Credits and Jobs Act, an area where Senator Scott has done a great deal of good work. Data released as recently as March of 2022 by the Opportunity Zone Fund Directory shows that $49.18 billion has been committed to anticipated investments, and 60% of those funds target investments in affordable housing and community development. Homes are more than just physical structures. Homes are a foundation for wealth building, family stability, and community cohesiveness. It's critical that we make the American dream of home ownership as attainable for as many people as possible, which will continue to foster the economic success of our nation. I look forward to discussing ways to ensure affordability and accessibility of home ownership with today's witnesses, and I thank you all for being here. Thank you, Mr. Chairman.
Thank you, Senator Crapo, and you're spot on in saying this is another area that we have an opportunity to lead the committee to some bipartisan solutions. Let me go through our witnesses. Andrea Bell is here from Oregon. It is so good to have you. She's the Executive Director of Oregon Housing and Community Services. She has served in different capacities there since 2019. Previously, Ms. Bell was a housing administrator for the Medicaid health plan, Mercy Care, so we're very glad you're here. Our second witness, we welcome him. They've worked very closely with us over the years, Jerry Conter, the chairman of the National Association of Home Builders. He spent 45 years building homes and commercial buildings in Savannah, Georgia. We're very pleased that he and the home builders are participating. Our third witness is Lee Ohanian, senior fellow at the Hoover Institution, distinguished professor of economics at the University of Los Angeles. I would just say to Mr. Ohanian, my late mother, worked at the Hoover Institution for many years, and it was the ultimate compliment when some of the executives said, Mrs. Wyden is so good, but she still is a Democrat. So we're very pleased that you're here. Our fourth witness is Benson Buzz Roberts. We welcome you, President and CEO of the National Association of Affordable Housing Lenders. Previously, Mr. Roberts was a Treasury official working in this area, so he has considerable expertise, and so we appreciate his leadership. Our fifth witness will be Ms. Dana White. She's the Chief Production Officer at Walker & Dunlap. Ms. Wade previously served as the Commissioner of the Federal Housing Administration in 2020. She's also got extensive experience in the executive branch, management and budget, but she also has Senate roots, the Senate Committee on Banking. So we welcome her. Because we're going to have so many senators participate, we're going to have to stick really closely to the 5-minute rule. Ms. Bell, you traveled the furthest. Start it off.
Wonderful. Well, thank you, Mr. Chairman and Ranking Member Crapo and members of the committee. First off, I just want to acknowledge and appreciate the opportunity to testify on the vital role that tax incentives play in our nation's affordable housing delivery system. Again, for the record, I'm Andrea Bell, Director of Oregon Housing and Community Services. We serve as the State of Oregon's housing finance agency. First off, Mr. Chairman, thank you for your steadfast leadership for many years and continuously elevating the needs of the people of Oregon and their housing needs collectively. Senator Crapo, I also want to acknowledge and just uplift your support for affordable housing. Your leadership certainly does not go unnoticed. For years, our nation has not built enough rental housing. But the conditions and circumstances spurred by the pandemic have made our housing crisis particularly acute, to which individuals with low incomes, individuals and families with moderate incomes are bearing the brunt of that impact. With rising interest rates, escalating home prices, skyrocketing rents due to the mismatch between supply and demand, many would-be homeowners are often left stuck renting. And more than 70% of extremely low-income renters across the United States spend more than half of their income on housing in 2021. 70%. That's 70% of individuals that have to make tough decisions every single month throughout the year about what bills they'll be able to pay and how they are going to get by. The housing credit and housing bonds are by far the most essential production tools that we have at our disposal. Affordable housing simply relies on these programs. The housing credit specifically is a highly successful both public and private partnership. And what we know is when we stabilize individuals and stabilize families, we also stabilize communities, which has an economic benefit. In the state of Oregon, nearly 70% of all rental homes financed in the last 5 years relied on bonds. Costs are increasing due to inflation, supply chain disruptions, many things that I know that members of this committee are fully aware of. Housing finance agencies and our partners across the nation are doing everything that we can to prevent deals from falling through. But the unfortunate reality is that sometimes financing gaps are simply too large, and in some cases, there are no resources to pull from to help cure those financing gaps. The most impactful thing that Congress can do is to pass the Senator Cantwell and Young's Affordable Housing Credit Improvement Act. It would both expand and strengthen the housing credit. It would significantly increase the housing credit authority, allowing us to build more properties like Riverbend Place in rural Ontario, Oregon. The Affordable Housing Credit Improvement Act would also provide states greater flexibility to spread existing bond resources to more developments by reducing the bond financing tests from 50% to 25%. I also urge Congress to pass the Bipartisan Lifeline Act introduced by Senators Leahy and Collins. This bill will enable states and localities to most effectively use federal fiscal recovery funds to fill financing gaps in housing credit developments. I also quickly want to mention two pieces of legislation that the Finance Committee should take up on means of homeownership. Senator Cortez Masto's Affordable Housing Bond Enhancement Act would enact simple and impactful improvements to the mortgage revenue bond and mortgage credit certificate programs, which are essential to serving low and moderate first-time home buyers. This is, again, creating pathways to homeownership, the dream that many of us have. Senators Cardin and Portman's Neighborhood Homes Investment Act would establish a new tax credit modeled after the highly successful housing credit. Now, simply put, the housing crisis simply will not get better if Congress does not act. In my last few seconds, I would just urge both and elevate my appreciation for this committee, and we need Congress to act. The action is going to come post this committee and what decisions we'll be able to make in service to the American people. I appreciate the time.
Well said, Ms. Bell. Thank you. Let's go next to Mr. Conter.
Good morning, and thank you for the opportunity to testify today. Every American deserves access to safe, decent, and affordable housing. Even after over 40 years in business, I still enjoy nothing more than handing over keys to the first-time buyer. But delivering an entry-level product is difficult. 69% of American households cannot afford the median-priced new home. But a year ago, nearly 1/4 of new homes were priced under $300,000. Today, it's 10%. We also face challenges with minority home ownership opportunities. Of households under the age of 35, which is your typical first-time buyer, 46% of white households owned a home, but only 17% of African-American households did so. And as a multifamily developer, I also understand how affordable rental housing creates stability for tenants. The housing affordability crisis is a result of failing to produce enough housing to match demand. If we're going to solve our housing affordability crisis, we must drive down the cost to build as well as the cost to own or rent. Well-structured housing tax incentives can help achieve this. Many of these incentives serve the public interest and remain effective, including the low-income housing tax credit. However, others have failed to keep up with changes to the tax code, such as the mortgage interest deduction. For over 100 years, the MID made homeownership more accessible, but the MID remains rooted in an increasingly outdated space in the tax code, itemized deductions. The changes brought by the Tax Cuts and Jobs Act, namely doubling the standard deduction, significantly reduced the number of taxpayers who itemize. Prior to those reforms, typically 70% of homeowners with a mortgage claimed MID. Today, that number has dropped below 27%. In 2017, 80% of the MID was deducted by taxpayers earning less than $200,000. Today, in 2018, that fell to 58%. The MID is simply missing the mark. The most effective way to promote and enable homeownership is to eliminate the mortgage interest deduction and replace it with a tax credit. A 15% tax credit claimed against mortgage interest and real estate taxes paid would offer a more effective and progressive tax incentive. The credit should be phased out for single filers with incomes above $250,000 and joint filers with incomes above $500,000. A credit structured along these lines can be enacted on a revenue-neutral basis starting in the 2026 tax year. In the next few years, many of the provisions enacted in 2017 will expire. This presents an opportunity to refocus the homeownership tax incentives so that the benefits flows to those who need it, middle-class, lower-income Americans from all backgrounds. We also recommend enacting the Affordable Housing Credit Improvement Act to boost production of affordable rental housing. And we support Chairman Wyden's proposal for a middle-income housing tax credit, which addresses a growing need for affordable workforce rental housing. Congress should also address the many housing incentives that are not indexed for inflation, such as the gains exclusion. And we urge you to reconsider the current limits on the SALT deduction. NHB greatly appreciates the bipartisan Senate support to solve our affordable housing crisis. After all, shelter is a basic human need. And the headwinds we are facing are strong. The index of builder sentiment had its second largest drop ever for July, and single-family starts fell to a 2-year low. We have an opportunity to do something that not only makes good economic sense, but will uplift the lives of millions of Americans. Thank you.
Thank you very much for important points. And I note that you're the president of your own home building firm, so we're very glad that you're here. Our next witness will be Mr. Lee Ohanian.
Chair Wyden, Ranking Member Crapo, and members of the Finance Committee, thank you for inviting me to testify today. Significantly increasing housing affordability requires progress on two fronts. One is expanding housing supply. The other is building that new housing at much lower cost than current cost levels. There are policy reforms that may be implemented using government incentives that would advance these goals. Today, I'll focus on two reform areas. One is increasing the use of manufactured housing, which is much less expensive to build than traditional housing. The other is in the process of building subsidized housing, which has become very expensive in some states, including my state of California. Our residential construction costs are high, in part because the process of home building hasn't changed all that much over time compared to other sectors in the economy. It hasn't benefited nearly as much from modern production methods. Interestingly, this point has been made within the federal government for at least the last 85 years. To highlight why construction costs are so high, I note that the Bureau of Labor Statistics reports labor productivity growth in residential construction grew just 11% between 1987 and 2016. This stands in sharp contrast to 150% productivity growth in durable manufacturing over the same period, which reflects substantial and continued technological innovations in our factories at lower costs. Manufactured homes are a much lower cost alternative to traditionally built homes. These are factory-built homes produced with modern cost-saving technologies. Census data showed the production costs of manufactured homes are about 60% lower than traditionally built homes. Because of substantial lower costs, manufacturing housing production boomed after World War II, accounting for about 60% of construction in 1972. But since then, regulatory burdens have reduced this adoption. Removing these burdens could substantially increase this importance. One important HUD requirement is that these homes sit on a permanent chassis. Now, this imposes a negative aesthetic on the home, as they are pejoratively labeled as mobile homes or trailers. The undesirable aesthetic of a home placed on a chassis induces a cascade of negative effects, including local zoning ordinances excluding manufactured housing from many neighborhoods. This means these homes are often placed in mobile home parks, which in turn means they are financed with personal loans or chattel loans, both of which tend to be more expensive and shorter duration than traditional mortgages, and neither of which provide the homeowner with mortgage interest tax deductibility. Recommendations to reduce the regulatory burdens placed on manufactured housing dates back at least to President Reagan's 1982 Housing Commission report. More recently, eliminating regulations that depressed the adoption of manufactured housing were made in a 2011 report commissioned by HUD. Eliminating the chassis requirement together with creating specific programs that incentivize state and local agencies to more broadly zone manufactured housing outside of mobile home parks could be a game changer in increasing affordability and would be squarely consistent with President Biden's recently announced proposals to increase affordability. I'll now discuss the importance of reducing the cost of building subsidized housing. Construction costs of subsidized housing have grown considerably, but particularly in the western United States. One San Francisco subsidized project is costing nearly $1.3 million per small apartment unit just for renovation and refurbishment. A 2018 GAO study of LIHTC projects found extremely large cost disparities in subsidized construction across states, ranging from a minimum of below $100,000 per unit in one Texas location to a maximum of $750,000 per unit in California, based on 2011 to 2015 data. The GAO found that only a few allocating agencies have requirements to guard against misrepresentation of costs, which is a fraud risk. The GAO also found weaknesses in data quality, inconsistencies in measuring and reporting cost-related variables, and the practice of not including the full extent of some indirect costs. The GAO also found financing inefficiencies, particularly related to the fact there are typically many lenders. UC Berkeley's Turner Center for Housing Innovation estimates that each additional lender adds an additional $6,400 in costs per unit. Lawsuits also delay affordable developments and increase costs. In California, lawsuits against affordable housing are often filed under the auspices of California Environmental Quality Act, which is recognized within my state as a tool that's often used to block and delay development rather than being used for its express purpose of protecting the environment. I recommend Congress revisit the GAO recommendations, including standardization of cost data from agencies that are collected and analyzed by a single federal entity. American home affordability can be increased substantially by incentivizing the adoption of low-cost production techniques, improving efficiency, and helping state and local agencies create acceptable building development opportunities in areas that are in high demand. Thank you so much.
Thank you very much, Mr. Ohanian. Mr. Roberts.
Well, good morning, Chairman Wyden and Ranking Member Crapo and other members of the committee, and thank you very much for your leadership on affordable housing. National Association of Affordable Housing Lenders is an alliance of major banks, nonprofit, and other mission-driven lenders and investors in affordable housing and inclusive neighborhood revitalization. Our member banks in 2020 provided over $180 billion to finance affordable low-income housing and other community development activities. And our members are the primary investors in low-income housing tax credits. So today we have bad news and good news. The bad news, of course, are the tremendous cost and increase in the affordability problem. According to the National Association of Realtors, prices and rents rose nearly 20% last year. But housing is not just the casualty of inflation, it is a cause of inflation. Even in 2020, home prices went up 11% when the CPI was rising only 1.4%. So building housing is really essential if we're going to get our long-term inflation challenges under control. Last October, about half of all Americans said that affordable housing in their communities was a major problem, and that exceeded what they cited for other really important problems like drugs and crime and the COVID-19 health and economic consequences. The good news, though, is we know what to do. The low-income housing credit is widely considered the most effective and successful United States policy to produce affordable rental housing ever. 3.6 million units so far, and about 130,000 annually. That's virtually all the affordable production over the last 35 years, and it is equivalent to about 1/3 of all comparably rent-priced multifamily housing in the United States. So it's had a major impact, and it could do much more. It's also performed exceedingly well. The cumulative foreclosure rate on housing credit properties is 0.57%. That's not an annual foreclosure rate, that's a cumulative foreclosure rate. As far as we know, that's the best performing asset class in all real estate. Pretty amazing for low-income housing. And then proposed Neighborhood Homes Investment Act would take many of the lessons learned from the housing credit and apply them to a different problem, which is to revitalize struggling communities and provide homeownership opportunities there by building starter homes and rehabilitating homes. And so we urge Congress to pass the bipartisan Senate Bill 98, sponsored by Senators Cardin, Portman, and 20 other senators. And that would produce 500,000 homes for homeownership in struggling communities over the next 10 years. The broad increases in housing prices really mask tremendous diversity across this country. The median price of a home in San Jose is $1.6 million. In Toledo, Ohio, it's 1/10 of that, less than $160,000. And every state has communities that are struggling. In those communities, it isn't economic to rehab or construct those homes. The numbers just don't pencil out. We need to have a neighborhood homes to fix that. The housing credit, too, has been so effective. Our priorities for the housing credit, of course, would be to pass the Cantwell-Young bill, the Affordable Housing Credit Improvement Act. The key elements to address are to first restore the temporary 12.5% increase in housing credit allocation authority that expired at the end of last year. And so we are actually losing ground rather than gaining ground today. Second, to increase the state allocation caps by 50% over 2 years. That would help every state in the country to produce more. Third, as Ms. Bell suggested, reduce the bond financing requirement to unlock tax credits from 50% to 25%. And finally, to reform the qualified contract and right of first refusal provisions in order to preserve affordability and extend nonprofit control of properties. So we do know what to do. We just need to do more, and we hope you will do it. Thank you.
Thank you very much, Mr. Roberts. We'll have questions in a moment, but we have Ms. Wade. Welcome.
Thank you. Good morning. And Chairman Wyden, Ranking Member Crapo, thank you for your bipartisan leadership on this issue. My name is Dana Wade. I am a Chief Production Officer at Walker & Dunlop. I'm a former FHA Commissioner. I'm a former Assistant Secretary at the Department of Housing and Urban Development. And Mr. Chairman, as you mentioned, I'm also a former Senate staffer, so it's a real honor for me to be on the other side of the dais. Walker & Dunlop, where I work, is one of the largest providers of capital to the multifamily industry and the fourth largest lender for all commercial real estate. We employ at Walker & Dunlop 1,400 people in 40 offices across the country. As a top affordable housing lender and the sixth largest low-income housing tax credit syndicator, we see every day both the need to build more affordable housing and the barriers that stand in the way. This panel has already talked a lot about the data, which is pretty clear on the need to build more affordable housing. One recent report showed a shortage of 3.8 million homes in the United States. 10 million low-income households spend more than half of their income on rent. And the list goes on. Add to that just kind of the everyday struggles. Millions of Americans spend more time getting to work, transit, in their cars, on buses, on trains, than they do with their family. So there are definite and very real hardships that are presented by the lack of affordable housing. That is why the conversation on increasing the housing supply that this committee is having today is so important. The Affordable Housing Credit Improvement Act is a very important step forward. And I'll go over just very briefly. I know, Mr. Roberts, you mentioned the benefits of that, but specifically, we think it would be very helpful to increase the already oversubscribed 9% tax credit, lower the threshold for private activity bonds from 50% to 25%, as well as making important reforms to allow the 4% credit to more easily be used and for rehab projects. Increasing the housing supply using these tax credits, as we've seen, has translated into better economic opportunities, a better quality of life. As one real-world example, if you'll allow me, of the difference these tax credits make in people's lives, Walker & Dunlop recently financed an apartment complex in Portland, Oregon, called Kentonwood. 100% of the units in Kentonwood were income restricted to those making 60% or less of the area median income, something made possible with LIHTC. All units have access to high-speed internet and energy-efficient appliances, and Kentonwood is a walkable, transit-oriented project close to a light rail station. That's just one example. We have many, many examples. From where we sit, there are other benefits of LIHTC, including, as Mr. Robert mentioned, very low cumulative foreclosure rate, low vacancies, and as well as a strong compliance for affordability. While LIHTC is very important, I think it'll be a big topic today. As the ranking member alluded to, that's just one side of the equation. We must cut through regulatory barriers at the federal, state, and local level that are holding back housing supply. An estimated 40% of development costs can be attributed to regulation at all levels. Record high costs for labor and materials are only adding fuel to the fire. Federal obstacles include long time frames for environmental and labor decisions, as well as some antiquated rules. One example is HUD's noise requirements, noise restrictions. Local policies like zoning, density limits, lengthy permitting and approval processes, and other land use restrictions are all examples. While zoning and other issues are in the hands of local citizens and their governments, as they should be, federal policymakers can provide a forum for best practices. Congress can and does leverage the supply of federal resources like LIHTC to increase the housing supply. Governments can also work together at all levels to standardize policies, practices, and timelines across different programs. In conclusion, I think everyone on this panel will agree that we need a combination of a lot of smaller local ideas as well as the big ideas to solve the housing crisis. Thank you again for the opportunity to be here, and I look forward to answering your questions.
Thank you very much. It's been an excellent panel. Mr. Conter, let me start with you. I have town hall meetings in each of my 36 counties, and overwhelmingly, what employers tell me their top issue is they can't find enough workers. And invariably, that involves those folks can't get housing. And my concern is particularly for the missing middle this morning, middle-class folks. Nurses and firefighters would be a pretty good example. And I want to ask you and my colleagues, we always try to operate under the theory that you've got to build a bipartisan coalition and focus on what works. We've all been talking about LIHTC, the Low-Income Housing Tax Credit Program. So what I've said is, quaint idea, why don't we build on what works? And that's what my middle-income housing tax credit is all about, to try to get shelter for folks like nurses and firefighters and middle-income people across the country. And when we talk about middle-income people, we're talking about families with incomes between 60% and 100% of median income. Obviously, depends on the area in which people live. But I'd like your thoughts on how the home builders feel about a middle-income housing tax credit. I heard you touch on it a little bit, but I understand that you all support it, and that's some good news. And as you know, in the Pacific Northwest, this also relates to the well-being of the wood products industry because it creates more opportunities in those rural communities for timber and forestry. So your thoughts?
Well, first, I would start with that we strongly support your bill. We believe that the missing middle is the hardest area to serve because typically they buy entry-level homes if they're on the home ownership side. And if they're on the multifamily side, they don't qualify for LIHTC or other subsidies, even direct subsidies such as Section 8 voucher program. So they have a disproportionate amount of their revenue or their income spent towards shelter, and they don't have the ability to accumulate down payments for even the lowest priced housing that is available in within the private sector. So this tax credit would solve part of that problem, and that's why we do strongly support it. But many people on the panel have already talked about the regulatory burden in producing housing. NIMBYism is a large part of that also. I know that in my community, I experience people that they want school teachers and police officers and fire people to serve their community, but they put in restrictions that affect housing prices that force them not to live within that community. And so I will tell you that my colleagues in the building industry want to build for every sector of America. We don't concentrate on one sector over another. We will be working with you and very much appreciate your support with respect to the middle income housing tax credit. And obviously we have fresh approaches in terms of trying to unsnarl some of that red tape at the local level. Let me get one more question in. I'm going to ask this of you, Mr. Roberts. You heard me say I'm very concerned about this trend of some in the private equity industry. What some are doing in the industry is exploiting loopholes in the tax code
to maximize their own returns while jeopardizing the low-income purpose of affordable housing. And I want to walk you through this because as far as I can tell, we're losing something like 10,000 affordable housing units per year just with one of these loopholes involving something called the qualified contract. And low-income housing tax credit properties are supposed to remain affordable for 30 years. However, this loophole allows LIHTC operators to sell their properties after 15 years to private developers who are going to go out and rent the units at higher prices. And as I say, thousands of units apparently are already being lost per year, and projections are that it's going to go up. I have proposed legislation to close that loophole. I'd like your thoughts on why that's important.
It's critically important, Chair Wyden, because it's so hard to build and rehabilitate homes. To be losing them through what has really become a loophole is just taking us back in the wrong direction. The problem is that formula under the qualified contract provision was written in 1989 when the low-income housing credit was very young and immature, and the real estate markets were very different, and it no longer serves its purpose and now has become an unintended exit ramp. This is not something that the original investors have been involved in, but sometimes we see new investors come in, particularly after the close of the 15-year compliance period, for the purpose of making profits.
My time is up, but I think what Mr. Roberts is highlighting is a lot of these programs and essentially the infrastructure, the rules were written decades ago. And you heard me mention algorithms being used to outbid Americans who just want to own a home. When you were talking about 1989, nobody was thinking about algorithms. So I very much appreciate the input. Senator Crapo.
Thank you, Mr. Chairman. Senator Portman, do you want me to?
Well, thank you. I appreciate it.
Should I yield about 30 seconds of my time, Mr.
Just take 30 seconds.
In the parlance of the Senate, you can yield.
Yeah. I apologize. I've got to go to this this meeting with Mrs. Zelensky. I'm just going to say that I really appreciate all the comments that were made today about the need for us to rehabilitate existing housing, and single-family homes are left out of the process right now. You know, it's a piece of the puzzle we need to fix. So that's why I think the Neighborhood Homes Investment Act is so important. You know, Cleveland's got 3,000 of these homes that are vacant, not being used. If they could be fixed up, it would really help toward this effort that everybody has acknowledged today, which is that increasingly the dream of owning a home is becoming out of reach for so many Americans. So I just want to acknowledge the work, Mr. Roberts, you have done, and others on the panel. We appreciate your help on this with Senator Cardin, and I thank my colleague for allowing me to yield.
Thank you, Senator Portman. Let me go to you first, Mr. Contour. The net investment income tax serves as a surtax on small businesses, and under recent proposals would subject active business income to the surtax. I think that, and I think you agree, that would result in higher rental housing costs. Can you explain how expanding the NIIT to include active investment income would result in higher rent?
Sure. There's the consensus is, or the consequences are especially acute for renters because it's just another cost associated with operation of an apartment complex. So that previously that active income was not taxed. Now it will be, and that will be passed along as part of the cost, and will put upward pressure on rents to cover it. There's no magic wand in how much rents are charged. They are absolutely directly related to revenue versus expenses.
Thank you. And Ms. Wade, you've alluded to this already, but what do you think the possibility of persistently high inflation means for affordable housing? And how would higher long-term inflation affect housing development and utilizing federal tax credits?
Well, Senator, that is a great question, and thank you. Persistently high inflation will mean persistently high rent increases. It's no surprise that if you think of inflation as a tax on everyone and everything, it impacts rent prices as well. And as Mr. Roberts stated in his testimony, higher rent prices also factor into CPI calculations. In fact, inflation is also very important in considering the efficacy of low-income housing tax credits. Persistently high inflation will mean that these tax credits are less effective and will decrease their value as well.
All right, thank you very much. And Dr. Ohanian, you've discussed today with us as well the impact of regulatory and zoning policies, however well-intentioned, on the ability for us to deal with the affordable housing needs in the country. Could you discuss any studies you're aware of that have analyzed the effects of these state and local deregulatory efforts to determine which land use and supply promoting strategies are the most effective?
Yes, Senator, great question. Regulatory burdens are expanding housing costs substantially. When we look at zoning regulations, what we find is that the states with the most severe zoning restrictions, such as my state of California, have the highest home prices. They have the highest construction costs. Construction costs rise as development is delayed due to lots of litigations and lawsuits that are often based on not in my backyard types of arguments. We look at states and locations with much laxer zoning regulations, such as Texas, Kansas, states in the Midwest. They tend to have much lower construction costs, much lower housing costs. So there's been a number of peer-reviewed studies. They all kind of come to the same conclusion, which is that land use regulations substantially drive up home prices, construction costs, and depress American welfare. And there's a lot of progress that could be made. Senate Bill 1416 is an important step in that direction by requiring agencies to compile data and report on how they are managing their land and being held somewhat accountable for how they're dealing with the needs to build more housing in very high demand areas.
All right, thank you very much. Thank you, Mr. Chairman.
Thank you, Senator Crapo. Next is Senator Carper.
Thanks, Mr. Chairman. I want to just back up just a little bit. Every now and then in this room, we talk about the least of these in our society and what we're doing to help the least of these. When I was hungry, did you feed me? When I was naked, did you clothe me? When I was thirsty, did you give me a drink? When I was sick and in prison, did you visit me? When I was a stranger in your land, did you welcome me? Matthew 25 says nothing about when I didn't have a place to live, when I was living out of my car, when I was living under a bridge, did you do anything about it? Well, we have an obligation, I think a moral obligation to do something about it. And it's not all on the federal government. It's not all on this committee, as you know. It's a shared responsibility with state and federal, locals, nonprofits, and the businesses as well. It's a shared responsibility. We welcome you here today with that spirit in mind. We thank you for joining us to talk about housing affordability. It's on top of the mind of my constituents in Delaware, and I'm sure it is in the other 49 states too. But in recent decades, I come to this hearing as a recovering governor of the state of Delaware for 8 years, and as the issues we first worked on a whole lot when I was governor. Delaware, I think, had, when I stepped down as governor, the highest home ownership rate of any state in the country, something we're very, very proud of. But in recent decades, rapid growth in retail prices and a lack of housing supply have made it difficult for a lot of people to find safe and affordable housing options, as we all know. And this problem is especially dire today as our constituents continue to feel the effects of COVID-19 pandemic and as they face price increases in other parts of the economy. I would note the price of gasoline thank God, is beginning to come down. And Wawa, we have a lot of Wawa convenience stores up and down the East Coast, and a bunch of them in Delaware. And price of Wawa, the price of gas is, I saw it yesterday, it was down to about, I think, $4.36, which is a drop of almost $0.50 in the last couple of weeks, and we're hoping it'll go a lot lower. But I was proud to work with Senator Chris Coons, my wingman from Delaware, and Congresswoman Lisa Blunt Rochester in securing $78 million to the American Rescue Plan to help tackle the housing crisis in the first state. These funds will leverage private dollars to support the development and rehabilitation of affordable housing units throughout our state, in coordination with nonprofits that include Habitat for Humanity, an outfit called Sinair, another one called InCall, and many organizations that are dedicated to addressing this same problem. One issue that deserves our focus is lack of affordable housing for our senior citizens. As our population ages, we must meet the specific needs of our seniors, who often live on fixed incomes and require additional support services. My question, this would be a question for Ms. Bell and a question for Mr. Roberts. All right. The others of you get away scot-free in this question. How can we ensure that tax incentives and other resources meet the unique and growing housing needs of our seniors? Let me say that again. How can we ensure the tax incentives and other resources meet the unique and growing housing needs of our seniors? Ms. Bell.
Well, thank you for that question, Senator. I think you're raising a couple of really important points that really elevate the unique situation that we're in related to supply and demand, and specifically how the issue of supply and demand is causing other issues around lack of access, lack of affordability. I think the reality right now in this moment, as we think about tax incentives and we think about all of the options in front of us, there's a couple of things that are worth elevating, which is one, being able to, lower the threshold when we think about private activity bonds, knowing that there is a real restraint that a lot of communities are feeling around that. When we think about low-income housing tax credit, we know what works. We have seen successes with that. We also know when we think about the lack of affordable housing issue that so many Americans are facing, particularly our aging population, we also know that we have to build affordable housing in all shapes and sizes that we have, and being able to have transit-oriented housing as we think about the needs of our seniors. We have some very real policy options in front of us today that we think will both reduce red tape, both increase access to affordable housing in a really formative way, and be able to build on what has worked and where we have seen the most progress across the country for diverse populations, including our aging population.
Go ahead. Mr. Roberts, briefly, same question. Thank you.
So, thank you, Senator. And I would just mention also that Sinair and NCall are two of our members.
Ah, that's good.
And Habitat, of course, is a big supporter of neighborhood homes. Directly to your question, one of the beauties of the housing credit is it gives states the authority to direct those resources to the greatest needs, including elderly housing. We've seen tremendous low-income housing tax credit properties that provide a lot of services to the elderly in conjunction with the housing, including assisted living, which is extremely hard for low-income elderly people to find.
Good, thanks. Mr. Chairman, my time is expired. Could I just take 15 seconds and I'm going to ask a question for the record. I just want to take a minute, not even a minute, just a moment, just to say what, for Ms. Bell, this is my question, we'll submit to you for the record. So you don't have to answer to it now, but in writing, yes. Here it is. What resources are most helpful in setting low-income families up for success when buying a home for the first time? And how can we expand access to these tools? I'll ask you that for the record. Thank you all for being here. Thank you for the work you do.
Thank you,
Thanks,
Senator Carper. And we're very proud of Ms. Bell as well, so I think you're going to get a good answer. Thank you. Senator Cardin.
Thank you, Mr. Chairman. First, let me answer Senator Carper's question in part by mentioning the Neighborhood Home Investment Act. And you'd be disappointed if I didn't. Now, Mr. Chairman, I want to thank you for the kind comments that you made. I was not in the committee room at the time because the Senate Foreign Relations Committee is holding a hearing on food insecurity. So we not only have housing insecurity, we have food insecurity around the world, but also here in the United States. So I want to thank you very much for holding this hearing. And I want to talk a little bit about the Neighborhood Home Investment Act. It is bipartisan. I thank Senator Portman for his comments and for his co-sponsorship on this, and certainly Senator Wyden and Senator Crapo for your help. It's supported by the White House, so we have not only bipartisan support, we have support from both branches of government. But I want to acknowledge the work that Mr. Roberts and his organization, the National Association of Affordable Housing Lenders, has done in regards to developing this legislation. We developed it as a need to deal with affordable housing. COVID-19 has underscored this need even greater. Inflation has made it even more urgent that we do something in this regard. We are talking about the appraisal gap for communities that need investments, that need affordable housing, but the cost of building or renovating exceed the value, and therefore it cannot be done under regular commercial circumstances. This leads to the decline of neighborhoods as well as to making worse the wealth gap in America. So, Mr. Roberts, can you just elaborate as to how the current market, which is anything but predictable, and investors' willingness to go into communities, how the Neighborhood Home Investment Act would help us deal with that challenge?
Yes, thank you so much for your leadership on this, Senator Cardin. Neighborhood homes would provide states with an allocated amount of tax credits. They would set their own strategies and priorities and run a competition among applicants to deploy those credits. Once an applicant wins an award, they would go and raise private capital and build or rehabilitate homes in distressed communities. Once those homes are sold and owner-occupied, the credits would flow, and the developers are, of course, are out of the picture. There's also a provision to enable existing homeowners whose homes need substantial rehabilitation to participate as well on a very simplified basis.
Thank you. Ms. Bell, if you could respond how this particular credit would help as it relates to neighborhoods that are been traditionally neglected and to try to deal with the wealth gap we have in America.
Absolutely. Well, I appreciate that question. And as I know this committee is fully aware, and I just appreciate your leadership in this particular area, is, you know, as we think about pathways to homeownership, as we think about pathways to housing and the impacts of that, across the country, we have continued to see the racial wealth gap that has continued to persist a lot of communities. And so as we think about mortgage revenue bonds, as we think about other resources, both on the tax credit side that we have to increase the pipeline of affordable housing, this both helps us reduce administrative red tape that exists. There is also being able to further leverage the tax incentives that we have to make sure that the spur of affordable housing that is happening is available and accessible to particularly our Black, Indigenous, and people of color communities. And then also from a policy perspective, Senator, being able to align those policies in a way that is bringing practical alignment in addition to the spurring of resources in this particular area.
Thank you. Mr. Chairman, I'll just conclude by saying the news today is the decline in the housing markets. We're seeing concerns because of rising interest rates, because of rising costs. So the urgency of dealing with these issues is even greater today than it was when these bills were first introduced. Thank you very much for holding this hearing.
Thank you, Senator Cardin, and thank you for your years of good work on these kinds of issues, and look forward to partnering with you in the days ahead. Senator Cortez Masto has been a very strong advocate for affordable housing. We welcome her, and I can just tell my colleagues, I have talked with her about these housing issues, and she very much shares the idea that we've got to increase supply. We understand if we don't increase supply, you know what happens in this kind of market? It's constricted and prices just go up. So a big part of this is increasing supply, and I welcome my colleague.
Thank you. Thank you, Mr. Chairman. And thank you for holding this hearing. And to the panelists, every single one of you, thank you, because this is exactly what I've been hearing in Nevada around our challenges when it comes to affordable housing. And we all know it runs in my state, from homelessness to low income to workforce housing. It is all of the above. And so I have been working with so many in my state to figure out what is it that we need to do to address affordable housing. And so there's some great legislation that I support here, that I'm a co-sponsor, that we need to get done. And I'm hopeful that in this committee we are able to actually do something. But one piece of legislation that I introduced, and Ms. Bell, I'm going to start with you because I can thank you enough for mentioning it in your opening, which is the Affordable Housing Bond Enhancement Act, S4445. And what it does is it improves the mortgage revenue bonds and mortgage credit certificate programs. You've talked a little bit about that. Can you do me a favor? Can you explain how the mortgage revenue bonds help low and moderate income families, help them buy homes and sustain those homes?
Absolutely, and thank you for your leadership on this, Senator Cortez Masto. So essentially, the Affordable Housing Bond Enhancement Act would allow state housing finance agencies to better utilize our bond resources to serve more home buyers. So in using the mortgage revenue bonds, state housing finance agencies, we have been able to help over 3 million borrowers, and the mortgage credit certificate programs have been able to help more than 360,000 families become homeowners. That is significant. And also within these, this particular bill, it would also be able to help us optimize programs so that they even work better for low and moderate income families as well. At this particular time, and we've talked a little bit about it already at this committee, when we have rising interest rates and lack of affordable ownership homes, the reality is that dream of home ownership is feeling further and further away, and even in my own family, that has been a reality. One of the other facets of the bill, Senator, that I think is really important to elevate, that I was happy to see in this, is an increase to the mortgage revenue bond improvement loan limit. So this increases it to $50,000 as it currently stands. It's at $15,000, which I believe has not been updated since the early 1980s. So we're talking about home improvements, necessary improvements. Particularly, we talked about it earlier as we think about our aging community and thinking about improvements and modifications that need to make the home not only livable, but this is also about quality of life.
Thank you. And I just thank you for the support. And let me just say, and I appreciate the support of the National Council of State Housing Agencies, the National Association of Realtors, the Mortgage Bankers Association, National Association of Home Builders, and other organizations for their support of this piece of legislation. I do think it is an all-of-the-above approach. How do we make it pencil out for the home builders? How do we help the home buyers? How do we give them choices? Manufacturing homes, believe me, this is an area that I've focused on as well, more choices for homeowners as we address all of these issues. One other area, let me just touch on very briefly, because I know I'm going to run out of time. But I do believe that the state and local fiscal relief funds that were provided in the American Rescue Plan really provides the ability to make a historic investment in desperately needed housing and communities across our country. So let me just say this. I would love to hear, maybe Ms. Wade, your thoughts on the Lifeline Act, because this is an opportunity to take funds that are already there, leverage them to support low-income housing.
Absolutely. And I do think that it would be a very important use of this funding. Mm-hmm. It would significantly increase the ability of states and local jurisdictions to produce more affordable housing. I believe Congress has already stated that a lot of these COVID relief funds at the state and local level should be used for affordable housing. So pairing that better with a program like the low-income housing tax credit would certainly be a huge step forward in that direction.
Yeah, and I listen, Nevada's governor and our housing leaders support the legislative fix to use really $500 million that we set aside from our Home Means Nevada initiative to do just this. We could use it to build more of a supply for low-income housing in Nevada, and everybody's ready to do it. So this is an opportunity for us to get it right. So this is why I support the Lifeline Act. And then for the reasons that you've all been talking about, the low-income housing tax credit. This is the number one thing I also hear as a fix that is potential for increasing our housing supply and addressing our needs in Nevada and across the country. Thank you all again. Thank you for the good work that you do.
I thank my colleague. I don't want anyone to think I'm going to wage a filibuster as we wait for a few more colleagues, but I appreciate my colleague from Nevada making the point with respect to the Lifeline legislation, which I touched on in my opening statement as well. This is a chance to squeeze more housing value out of existing dollars. And the fact that Senator Leahy, Senator Collins, myself, my colleague from Nevada, we've got plenty of bipartisan support for it. I'm very pleased about it, and I'm just given U.S. home prices hit new record of $416,000 in June as sales continued to slide. So I don't think we really needed much of a wake-up call, but that certainly drives it home. What I'm struck by, and I'd like to give other panelists a chance to talk about it, is my question to Mr. Roberts involved some of these examples of loopholes and laws that are particularly hurting our ability to offer affordable housing. And Mr. Roberts said, hey, this stems from a law that was written in 1989. So we're talking about laws in this area that, if not from the dark ages, are certainly pretty ancient. I'd be interested in your thoughts about whether there are other examples of laws where you think that the bureaucratic barnacles are just getting so thick that it also is hampering the ability to offer affordable housing. I think some of it, and this relates to Mr. Conter's point, involves outdated rules at the local level. And I really appreciate Ms. Bell's leadership working with local communities as well. She's given us almost a little dissertation in the kind of the principles of supply and demand, and we thank you for it. But I also want to make sure that folks understand that in our part of the country, we've worked very hard to try, as you've suggested, and Ms. Wade touched on it as well, is to figure out how in the future we won't have people working over here and living over here and going back and forth in outdated transportation systems. But are there other laws that we ought to be aware of? And in fact, here's what we're going to do. Since we have had the good fortune of having Senator Young come, I can give him a chance to catch his breath briefly. He's doing very good work on the semiconductor legislation, which we're glad to partner with him, and he has been part of our little bipartisan coalition here on the Finance Committee for Housing. So while you contemplate whether there are other outdated laws along the lines of that loophole that I asked Mr. Roberts about, let's hear from a strong advocate for housing, Senator Young.
Well, thank you, Chairman, for holding this important hearing on affordable housing. I thank every one of our witnesses, because I have to tell you, as I travel across the state of Indiana, I hear from every community about the importance of affordable housing and about the challenges they're experiencing right now. This shortage is, of course, being exacerbated by the current inflation challenges more broadly impacting the country. And throughout my time in Congress, I've done my best to remain focused on efforts to address the housing shortage. I've been proud to work in particular with my Finance Committee colleague, Senator Cantwell, on the Affordable Housing Credit Improvement Act. This bill, as I think our witnesses know, will help strengthen the low-income housing tax credit program, also known as LIHTC, which remains the most successful affordable housing program in the United States, a public-private partnership supported in a bipartisan fashion over the years. If we want to address our nation's housing affordability crisis, I think it's crucial that we pass the legislation to improve the affordable housing program, the LIHTC program, by passing the Affordable Housing Credit Improvement Act as soon as possible. So I ask our witnesses today, this should be an easy one, by a show of hands, who supports this Affordable Housing Credit Improvement Act? Well, thank you. Let the record show that all 5 of 5 witnesses support the Affordable Housing Credit Improvement Act.
The record will show it. and I was almost going to dare anybody to say that they didn't, but it is a very important piece of legislation that Senator Young and Senator Cantwell have led, and I appreciate it. Senator Young, continue.
Mr. Chairman. Let the record also show none of the witnesses are under duress or so forth. Okay, thank you. So let's dive into why this bill, just for a moment, in the LIHTC program have such far-reaching support. Mr. Roberts, can you kindly explain what it is that makes the low-income housing tax credit so effective in addressing the affordable housing crisis?
Well, thank you, Senator, and thank you for your leadership on the Affordable Housing Credit Improvement Act, as well as the Neighborhood Homes Investment Act. They share a common DNA, and what makes these credits work so well is a combination of factors. First is private market discipline. The credits only flow after the development is completed and public benefits are flowing. So we're not giving money away and hoping for a good result. We're paying only for success. And
paying for success, which is another thing that I've been focused on during my time in Congress. Frankly, my constituents insist upon it.
Yes, and by the way, thank you for your leadership on applying this pay-for-success principle throughout the federal system. It has tremendous promise, I believe. In addition, and so it's a very competitive market. The credits are limited. The states allocate them only for the highest priority activities, and then investors have to compete to invest in those properties. And if for any reason compliance is not followed through, those credits are recaptured. So tremendous discipline. Second, state administration. Ms. Bell and her colleagues have done an amazing job in stewarding these resources. We have tremendous confidence in them as stewards, and that's why neighborhood homes would rely on them. And they are both targeted and flexible. So they're targeted to the greatest needs, but flexible in how they're applied, and the tremendous economic and community benefits spinning off.
Thanks so much for that. One of the things I find unifying about the housing affordability crisis, and I like to focus on unifying issues. The chairman was kind to mention the innovation or China competition bill that we were able to advance last night on the floor of the U.S. Senate. One reason I was working on that is during this time of tribalized and parlous politics, we can rally around solving difficult challenges together across political aisles, across political philosophies. And this housing affordability crisis, it's striking how it impacts various demographic groups, geographic areas. It doesn't really seem to discriminate a lot. The brunt of this crisis, it falls on a diverse population. And it's so important we support programs and ideas that meet the needs of these varied communities. So, Ms. Wade, just very briefly, can you please talk about how the LIHTC program helps a range of people in need?
Senator, thank you for the question, and also thank you for all that you have done to support affordable housing. You are absolutely right that the problem of the lack of supply of affordable housing hits everyone, unfortunately. And one of the things that we see is that the LIHTC program has been very effective at bringing people directly off the streets into housing. It is one of the only programs that has done so with the support of the federal government. We see a range of types of individuals and families living in LIHTC-supported housing. That includes veterans. So 10% of our homeless population is made up of veterans. That includes people recovering from opioid addictions. That includes seniors, people with disabilities. I mean, it really does run the gamut of some of our nation's most vulnerable.
Thank you so much. I do see I'm out of time. I see a couple of other leaders as it relates to these issues have entered the committee room. So I'll look forward to continuing discussions about this bill and about other housing legislative priorities in my questions for the record. Mr. Chairman.
Senator Young, before you have to take off and go back and prosecute our cause for the semiconductor industry here in the United States, I'd like to note that what you and Senator Cantwell have done with respect to the LIHTC model has led people to say this is a solid approach. for the housing policy of the future. And the home builders, represented by Mr. Cantor, are responding with the legislation that I proposed, the middle income housing tax credit, the LIHTC kind of approach, so that a firefighter and a nurse will have a chance to start climbing the ladder of upward mobility. So good work to Senator Cantwell and yourself on this, and you'll continue to have my support in the days ahead. Senator Hassan.
Well, thank you, Mr. Chair, for the hearing, and thank you to our witnesses for being here today and for the work that you do. In New Hampshire, I hear from families and small businesses alike about the burden of rising housing costs and what that has done to their ability to live and work in the state, also what it's done their ability to recruit people to come work in the state, among other things. So I'm developing a package of housing legislation that I plan to introduce soon to help bring down these costs. My bill would incentivize investments in state affordable housing trust funds. Ms. Bell, can you just please speak about what these trust funds are and why they are so important?
Yes, thank you for that, Senator. And just want to acknowledge and uplift your leadership in this. So Oregon is one of 39 states that has a state housing trust fund. These funds typically, though not always, have a designated revenue source and can be particularly helpful in providing additional housing resources for state needs. In the state of Oregon, our trust fund is funded by a state general fund and lottery funds. And certainly, as you continue to pursue and work on this bill, we are eager to work with you in this area.
Well, I appreciate that very much. My bill would also support the construction of new workforce housing, creating a new competitive grant program at HUD. Mr. Cantor, can you expand about how building more housing will help lower costs for home buyers and how federal support can help build more houses?
Absolutely. The crux of the problem is very simple. We're just not building enough houses. The more houses we build, the less pressure we have on rising costs because we are supplying the market.
Yeah, I appreciate that very much. And I'd also note that the more housing we have and the more people who are housed, the more other issues that we all work on together we can address. Mr. Roberts, I've also previously introduced bipartisan legislation with Senator Blunt, the Middle Class Mortgage Insurance Premium Act, to provide tax cuts for middle-class home buyers who use mortgage insurance. How does mortgage insurance make home ownership more accessible, and how can we continue to cut costs for families?
So private mortgage insurance is very important so that home buyers who don't have 20% down payment funds can get in, and we often see them come in at 5%, even 3% down payments.
Yeah.
That's much more attainable for first-time buyers, and so cutting the cost of that mortgage insurance is very important to making sure they can afford the monthly payments as well.
Okay, thank you. To Ms. Bell, one more question. In response to the COVID-19 crisis, Congress provided states with financial support to assist with their response to and recovery from the crisis. While New Hampshire and other states have committed to using a portion of these funds to support housing, it's difficult to pair these funds with another critical federal housing tool, the low-income housing tax credit. That's why I co-sponsored the Bipartisan Lifeline Act to ensure that states have the flexibility to utilize both COVID-19 response funds and the low-income housing tax credit. Ms. Bell, how can increased flexibility for states to use these funds support housing efforts all across the country?
Yeah, thank you for that question, Senator. So about 31 states are devoting over $9 billion in coronavirus state and local fiscal recovery funds towards affordable housing activities. And of course, this total does not include what local jurisdictions may also invest in affordable housing activities. And although the state of Oregon is using these funds for other affordable housing activities, about 24 states have indicated that they intend to use at least a portion of these resources as gap fillers, so filling financing gaps, which is absolutely the right thing to do. But it has not come without difficulty, certainly. And so within the American Rescue Plan Act statute, there is Unintentionally, there is language in there that makes it difficult to use these funds for long-term loans, which is exactly what you need for affordable housing. This is where the Lifeline Act comes in. It would essentially fix the problem by allowing state and local governments to utilize these resources for long-term loans, which of course supports what we're talking about today, financing more affordable housing.
Okay. Well, thank you for that. And I look forward to working with all of you as we continue to try to combat this challenge. Thanks.
Thank you, Senator Hassan. Next is Senator Thune, and then we want to hear from Senator Cantwell, who's been doing extraordinary work on these issues for a long, long time. Senator Thune.
Thank you, Mr. Chairman, and welcome to all of our witnesses this morning. Mr. Conter, as you know, we're here to talk about the role of tax incentives in affordable housing. I'd like to start out by asking you about tax-related disincentives to affordable housing. Specifically, I'm talking about tariffs, which are de facto taxes on softwood lumber imports from Canada. Softwood lumber is a critical input to home construction, and the current 17.9% tariff rate on these imports increases U.S. home building costs, harms affordable housing, and fails to increase supply. Earlier this week, Senator Menendez and I sent a letter to the Department of Commerce and to USTR urging the Biden administration to prioritize lumber trade to reduce housing costs. So, Mr. Conter, do you agree that reducing tariffs on softwood lumber would help make home construction and home ownership more affordable?
Thank you for the question, Senator, and thank you and Senator Menendez for your leadership on this issue. Yes, I do believe reducing tariffs on imports of Canadian softwood lumber would make home construction and home ownership more affordable. Lumber represents one of the most significant material inputs to the construction of a home. Trade measures that act as a tax on these inputs are necessarily going to increase the cost of the final product. Conversely, anything that you can do to remove these trade barriers is going to reduce the cost of the final product. And if I could also, Senator Wyden earlier said, what kind of regulations are outdated? Our trade policies go back to the Smoot-Hawley Act. So if you think that maybe if they're not working, if we can't get agreements and we're structurally built in, the structure built into the review process of that trade program does not have the effect of us being able to act quickly on modifications to trade policies, then maybe we need to look at the overall picture of how we create our trade policy.
Thank you, and I was going to follow up with a question about what we could do in a more general sense in how a renewed U.S.-Canada softwood lumber agreement could benefit affordable housing, but I think you kind of addressed that in your last answer. I would just say hopefully that the administration takes timely action on these issues. These are practical, bipartisan ways to help with affordable housing and the U.S. housing community at large. Let me just speak, if I might, for a minute to South Dakota. Housing availability, affordability are a huge issue for South Dakotans. I hear about these issues all the time from constituents, especially in communities like Rapid City, which is quickly expanding. And with construction costs and supply prices significantly inflated, this is making it more and more difficult to start or complete new housing projects. And according to the National Association of Realtors, the average cost of housing in Midwestern states from 2013 to 2021 increased by more than $80,000. So if I might, Ms. Wade, you touched on this in your written testimony, but could you share your insights into the U.S. housing deficit, both in terms of data and how it's impacting families and livelihoods across the country?
Yes, Senator, that is a great question. By one estimate, and by the way, I've seen this estimate doubled, we have a shortage of 3.8 million homes in the U.S., which is staggering. I think it's almost hard to grasp. There are a lot of things that have to come together to address this urgent need, both at the federal level, so the legislation this committee is discussing, things that you have worked on, Senator, at the state, local level, as well as with the private sector. I think the low-income housing tax credit brings together all of those various components. and is one way to effectively increase the supply of affordable housing. It also takes a lot of reform at the local level when it comes to things like zoning, when it comes to things like permitting delays and other policies at the local level. And all of this kind of has to be viewed holistically as part of the housing ecosystem in order to truly solve this problem.
Well, and I would, just to follow up, my time's expiring here, but I just want to say, with respect to that, one of the things we've heard from the South Dakota Housing Development Authority is just that those who participate in these multiple federal housing programs simultaneously, like the low-income housing tax credit program, combination of programs at HUD, the rules governing these programs are not uniform. And they can create challenges for state housing authorities and also disincentivize property managers to participate in some of these programs. So I hope that that's one of the things, Mr. Chairman, too, that we can contemplate trying to work with these programs to ensure that they are functional and workable and don't impose these heavy burdens, compliance requirements that makes it very difficult for those out there that are tasked with trying to create more affordable housing options are not buried in a mountain of federal paperwork. So thank you, Mr. Chairman.
We are definitely going to be following up with respect to the rules and regulations. Next is Senator Bennett.
Thank you, Mr. Chairman. I appreciate it. And thank you for having this hearing. In Colorado, 14 years ago, I guess, I was the superintendent of the Denver Public Schools. And it was very uncommon to meet a teacher who didn't live in Denver if they worked in the Denver Public Schools. Today, it's impossible for a teacher to afford to live not only in Denver, but in suburban Denver. I had the Colorado Teacher of the Year come visit me a month or so ago. She's from Glenwood Springs, which is a rural community on the western slope of Colorado. And in passing, she wasn't complaining, but she just made the observation that 70 to 80% of her colleagues in the middle school and the high school where she teaches have to have 2 or 3 jobs just to live in Glenwood Springs. So, this is a real failure on the part of our society, I think, to be able to create workforce housing in our states. And it's getting to the point where we're losing businesses and losing medical practices because people simply can't afford to live in the state of Colorado anymore. Housing costs are far outpacing incomes in every single Colorado community. In Metro Denver, average rent increased more than 14% last year, and the median home price in Denver, Colorado recently topped $600,000, which is up 20% from the previous year. But in Durango, which is on the western slope of Colorado and the southwestern rural part of our state, the median price for an in-town home hit $650,000 last year, a 30% increase from the previous year. Employers across Colorado, especially in mountain towns and rural areas, tell me they can't hire because of the shortage of housing. In 2021, last year, I convened a diverse bipartisan group of 30 leaders from across the state to develop solutions to the housing crisis. These are experts in housing who are looking at it from all different vantage points. Their top recommendation, it won't surprise anybody on this panel, is to do everything in our power to increase housing supply, including expanding existing programs that work. We need to do more to modernize our government's response at every level, give communities greater flexibility, and embrace innovation and promote housing stability, as my Eviction Crisis Act with Senator Portman would do. The low-income housing tax credit is our most effective existing program to build new affordable housing. And Ms. Bell, I'm actually coming to a question for you, but that's why I strongly support Senator Cantwell and Young's Affordable Housing Credit Improvement Act to expand LIHTC. I'm also pushing for swift implementation of one improvement Congress already has passed to expand LIHTC-developed housing to more families. Back in 2018, Congress created the average income test, enabling LIHTC to serve households earning up to 80% of median family income. In May, Senator Young and I led a bipartisan bicameral group of colleagues calling on IRS and Treasury to expedite release of a final workable rule on the average income test. Ms. Bell, how would finalizing the average income tax rule expand affordable housing to more families in this country?
Thank you for the question, Senator. And I know that there is collective solidarity and alignment in the experiences of folks in the state that you serve around affordable housing. So the average income test, which Congress enacted for the housing credit in 2018, is actually an important new tool that will make housing credit properties more economically diverse. And this is done by allowing owners to serve households earning up to 80% of the area median income, while at the same time still making sure that units are underwritten to be affordable for some of our individuals and families with the lowest incomes. And so the average income test does this by using rental income that is charged by the higher income but still lower income households to essentially offset the lower rents charged to households who may be very low or in some cases extremely low income. The proposed rule implementing the average income test was simply, historically was simply unworkable, and I think some of the interest has chilled in that, but there is some very meaningful positive steps forward within the average income test, and we're certainly grateful to you and the other senators that have signed on to urge Treasury and IRS to really focus on this particular area.
And I hope this committee will keep pushing. Mr. Chairman, I had another question, but I'm conscious of my colleagues. So, Ms. Wade, I'll submit a question on homelessness for the record, and I'll yield.
I thank my colleague, and we've been working together on these issues for a long time, we Westerners. Senator Brown is next, and I believe we can get in Senator Warner and Senator Cantwell.
Check in.
Senator Brown, Chairman of the Banking Committee, which works very closely with this committee on housing.
Thank you for the witnesses today for joining us. As chair of the committee to which Chair Wyden referred, housing affordability it's not only a priority, I think, for certainly everybody on this side of the aisle, perhaps beyond that, but a moral imperative. Too many people are paying too much to keep a roof over their head. A quarter of renters, and I think most of you know these statistics, a quarter of renters pay more than half their income in rent. Homeownership is increasingly out of reach to far too many families. I'm glad that what Senator Wyden and Senator Crapo are doing, scheduling this hearing, that we can work on this. So I partnered with Senator Wyden to introduce the Renters Tax Credit Act. This bill is intended to complement LIHTC and make sure that extremely low-income renters don't have to pay more than 30% of their income towards housing. You know what happens in families like that? Everything's upside down when they're evicted. So my first question is for Mr. Roberts. In Cleveland, we have a lot of homes that could provide good, affordable, first-generation homeownership opportunities. These homes, many of them need repairs. Some of you have heard me on this committee, as I say in our other committee, that the zip code my wife and I live in had more foreclosures in 2007 than any zip code in America, a zip code in Cleveland. So when homeowners can't make these repairs themselves, the houses sit empty or they're snapped up by out-of-state investors exploiting the tax code to turn a profit, and the problems of that are evident. So, Mr. Roberts, how could the Neighborhood Homes Investment Act, a bill I've worked on with Senator Cardin, I know he referred to it, help address the shortfall in affordable single-family homes and keep homes in the hands of lower-income and aspiring homeowners?
Well, thank you so much, Senator, for your leadership on neighborhood homes and low-income housing credits and everything you do in the Banking Committee. It's been really remarkable to see the comprehensiveness of your strategy. Neighborhood homes can fill the gap between what it costs to build or rehab a home in a struggling neighborhood and what the local market there can support. And without that, it's just not feasible for private developers or even existing homeowners to improve their homes and, by extension, the neighborhoods. The entire neighborhood suffers when these homes are deteriorated because most of the land use in most of these neighborhoods are single-family homes. So we can't really fix up those neighborhoods without addressing this problem. And neighborhood homes would allow states to deploy credits so that in just the right amount to cover that gap.
Thank you. Mr. Contra, I want to talk to you about your industry, about the home builders. We hear from people around the country what zoning regulations have done, impeding ability to build new homes across the country. Comment on that, and then comment on what, if we were to provide funding to support communities that update zoning regulations, would that help increase the supply of housing?
Thank you, Senator. There's a great deal of NIMBYism. In fact, some of your colleagues have supported the YIMBY Act, which is yes in my neighborhood. And because of that, there tends to be zoning regulations that are put in place, whether intentional or disparate. The result is that they raise the cost of housing, and therefore we can't build affordable housing through those zoning requirements. So it is a great problem. Our members face it constantly. Things such as design standards being added to zoning, which has really nothing to do with zoning, but increases the cost of housing. Zoning is a tremendous problem.
So the question, though, was in understanding that, and I agree with you, and I think that's pretty much believed across the board. Would funding to support communities that update their zoning regulation have an impact? Is there a way of doing that? Are you proposing ways of making that happen?
Yes, funding to local associations, to local municipalities that reform their zoning regulations so that it will allow more affordable housing to be built and restrict, as long as the property is zoned for single family or multifamily, restrict any further regulations. That would help add to housing stock.
Mr. Ohanian, you agree with that?
Do I agree?
I'm sorry, Mr. Ohanian, do you agree with that, sir?
Yes, I do, Senator. There's just a massive body of peer-reviewed research that studied zoning regulations and how those increase the cost of housing and depress construction. And yeah, my own research has looked at that as well. And my co-authors and I find that affordability would substantially increase, and inflation-adjusted GDP would rise in the U.S. as a consequence of rolling back zoning regulations and land use regulations back to what they were in the 1990s or the early 2000s.
That recent. Okay, thank you. And not a question, but Ms. Bell, your senior senator has been a really good partner on these housing issues between the committee that I chair and this committee, and thank you for that.
What an inflationary comment, and I thank my colleague. We love working together. Okay, we've got a vote on, but we're going to be able to get in both of our senators. Have a long interest in housing, Senator Warner, and then it's so appropriate that Senator Cantwell wrap it up, given her leadership all these years. Senator Warner.
Well, thank you, Mr. Chairman, and I do think my friend, the chairman of the Banking Committee, of which I'm on, that was a gratuitous plug for you in terms of the Senior Senator Morgan. And I want to thank both of you and Senator Cantwell. This is an area where we all have approaches, and this hearing is so important. I'm going to skip the part about the same kind of gaps that all of us have indicated. I want to indicate, I know Senator Cantwell's been great on low-income housing tax credit, the home investment tax credit, new market tax credit. I want to very quickly get to two items. One, something that Senator Brown actually worked with me on when we thought more of the president's agenda would get through, something I thought was very creative and worked closely with the Civil Rights Committee, which was something called the LIFT Act, which would have created for first-generation, first-time home buyers, which unfortunately in this country are still by default 60% people of color, if they could qualify for a traditional 30-year mortgage, we would provide literally a 20-year mortgage so that it would be the wealth accumulation at twice the rate, because I think racial wealth gap in this country is an extraordinarily challenging issue, and unfortunately, home ownership is a huge component part of that. And I do hope that program, the LIFT Act, combined with my support as well for down payment assistance, is a good 1-2 combination. What I want to take my time, and I'm going to get to Mr. Roberts, I'm going to start with you, and if anybody else wants to weigh in as well. Another area that I've been working on, the chairman's been very supportive as well as the ranking member, is additional support for Cdfis and Mdis community development financial institutions, MDIs, we don't have nearly enough anymore. Minority depository institutions, we were able to get $12 billion, $3 billion in grants, $9 billion in Tier 1 equity into those institutions. Really, I think, interesting initiative. But it's still not going to be enough. So in a bipartisan way, we've recently put together a Cdfi tax credit that would give a tax credit to those private sector entities. And I think in terms of many of the companies who said in the aftermath of the murder of George Floyd wanted to do something on racial equity, and we've done a pretty crummy job of making sure they actually put their money where their promises were. But this would say, if you put in long-term, more than 10-year patient money, we're going to give you a tax credit. We'll give you a slightly larger one at 20 years. I think this is again, no single silver bullet, but a very, very effective tool to take this, what has historically been a relatively narrow niche of the financial sector, the Cdfis, and try to expand their capacity. Mr. Roberts, since you were kind enough to work with my office on putting this Cdfi tax credit together, I'd love to get your comments and suggestions on why you think it's a good idea.
We're tremendously excited by this proposal, Senator Warner, and I want to thank you as well as Senators Wicker and Hyde-Smith for all your leadership on this and for your...
And got to give Chris Van Hollen credit, too. He's part of the group.
Senator Van Hollen, my senator and neighbor. This could make a huge difference. CDFIs do the hardest work in community development finance. They are designed to fill the gaps that other private sector financial services providers cannot do on their own, but they are great in partnership together. And what your tax credit proposal would do would be to build those partnerships between capital providers and the CDFIs that are on the ground to do it. The CDFIs need long-term capital because community development requires it. It's the hardest kind of capital to get, but it has to be available at a cost that makes sense. And your tax credit would lower the cost of that capital to enable CDFIs to really greatly expand their impact.
Well, I appreciate the work, and hopefully we can move on this. And I'll lose my last 55 seconds before I yield to Senator Cantwell, is to also make a slight pitch to the committee members and others on another small initiative in this space, Section 113 reform that would take the Regal Act of '94 and basically with a very small amount of money, literally in the millions, start experimenting on whether we could actually securitize some of the CDFI debt, which again would be another tool to make sure we spread this capacity more. In the spirit of Senator Bennett, I will actually, as opposed, since he yielded back when he was already in the red, I'll yield back when I'm still in the yellow. Thank you, Mr. Chairman.
I thank my colleague, and I have been supportive of those community development efforts, and I'm going to continue to do so. How fitting to have Senator Cantwell wrap this up after her years of leading our committee and being out on the floor, leading America to make sure that we have semiconductors in the United States.
Yeah, make sure you give credit for her big win yesterday.
Huge win. Senator Cantwell.
Thank you, Mr. Chairman, and thank you for holding this hearing on incentives for affordable housing. And I thank you for your leadership on the legislation that you introduced on the middle housing. Clearly, the 2009 downturn pushed a whole lot of people into different categories, and the consequence of that are still being felt. And so I definitely appreciate your past help and support on the low-income housing tax credit and your legislation, and certainly want to remind people of Senator Hatch when he was with us, was a great leader on this. I always loved that Utah did a Housing First initiative, probably one of the first Housing First initiatives, part of the veterans community there, and showed great success of driving down the cost. If you house people first, you're driving down the cost of that population that we would otherwise have to be seeing impacts from. And certainly want to thank my colleague, Senator Young, for his leadership with us on trying to increase the low-income housing tax credit by 50%. I guess, you know, people don't realize we got a little bump a few years ago, and that expired at the end of last year. So we're actually going to go down in the amount of money that we're putting towards the tax credit. 90% of the affordable housing that gets built with the tax credit. So it really is a governor, if we don't increase it, on solving the problem. I feel like I don't know why we can't get this out there. I just don't understand why. I feel like painting a big supply message across, maybe one of the avenues out here. It's just supply, or it's supply stupid, or, I don't know what you get about it. It's really just about supply. And it's so frustrating because there's so many people who've written reports. I could probably get a stack this high of reports saying it's a supply problem. So I would just like to hear from the witnesses why. Why is it that we are not breaking through on the supply message? When you talk about it, it's pretty easy on the demographics. You have elderly people living longer, and that increased the demand. You had returning veterans from the wars, that increased the demand. You have workplace issues like we do in Seattle, that increased the demand. We had a bunch of people fall out of middle income into low income, that increased the demand. I don't get why we can't just admit that we have a supply problem and do something about it. So anybody have an idea why we're not getting this across the goal line?
Well, Senator, I just want to note, and I think you bring up some excellent points. I sit on a board at the Bipartisan Policy Center. They recently conducted a poll that had a very specific question about, do you support increasing the housing tax credit? And it was overwhelmingly bipartisan. It was somewhere like 70% of all Americans support it who were surveyed, 55% of Republicans. So it's a bipartisan issue. I think it is one where you're right. The data overwhelmingly states that it is a problem with housing supply. It's directly tied to affordability. And, it's a variety of challenges. I think the LIHTC is an important step forward, though, in increasing the supply. Everything that you have done and your leadership will be a huge step forward.
Anybody else want to talk about this?
Senator, as an economist, what strikes me as somewhat tragic is that we've had a housing crisis almost for 100 years. The average price of a Midtown Manhattan home in 1929 at today's dollars is $1.2 million. Our housing is expensive to build. There are some efficiency-enhancing reforms we can implement. We can also implement zoning reforms that will make it easier and less costly to build in areas of high demand. And one thing that we've seen evolve over the years is that a growing number of Americans are really focusing on a relatively small number of locations to move to, including Seattle, including the West Coast, including some parts of the Southwest. And sadly, some of those areas, for example, in my home state of California, we make building very, very expensive. In my testimony, I mentioned that one project in San Francisco is costing $1.3 million just to renovate an existing small apartment unit per unit. And when you look at those types of costs, you've got to scratch your head and say, there's got to be a better way. And I think as technologies advance and there are opportunities to increase the use of manufactured homes and change some regulatory requirements, the HUD requirement of a chassis, I think that we have reason to be optimistic if we can make the right choices, and your committee here is very much focused on that, and I'm optimistic then that you can do that, and the future is very bright from that standpoint.
Well, I think we have an inflation problem, and part of it is housing. And if you think about, again, back to this, I like the details, but I think the details are almost irrelevant because they're not totally irrelevant, but if we don't get across this supply issue, if we don't get people to understand that it is a supply issue. Now, yes, can you make it more efficient and affordable? Yes, let's do that. But somehow all that discussion stops people from really understanding that it is a supply crisis. And again, if 90% of the affordable homes are going to be built with a tax credit, then unless we increase the tax credit, we're not going to get out of this. No matter how many people in Seattle pledge to spend millions of dollars on a project, we're not going to get out of this. And so I do think I don't know. I have a suspicion that the derivative market crash has more to do with this. I think it had a chilling effect for several years when we should have realized what the crisis was going to do. My colleague, Senator Bennett, and Senator Brown talked about it a little bit. The crisis made everybody freak out about housing in general because people commoditized or securitized, I should say, some way to make, they thought, more housing supply. And literally it was a house of cards that collapsed. And then people were blaming all sorts of people, and then we did nothing. But at that very moment, we also pushed more people into that demand market because they literally fell out. They fell out of the economy. They literally fell out of the economy. And we didn't do anything to meet demand. So it used to be in this nation that in the 70s or 80s or even 90s, you would hear, housing, let's go housing. Where did that cheer go?
Well, it very much is a supply issue. And to get back to the idea of cost, the more we can reduce costs, just economically, the more we can expand supply. One study in California showed that if California light tech construction costs were not even at the average of other evaluated locations by a GAO study, but were close to that average, California could have built 12,000 more units under light tech funding. So I think until we recognize that our construction costs are remarkably high, it's going to be hard to expand. It's going to be hard to expand supply unless we're really going to push on the subsidy throttle and really, push a lot more dollars into producing what's an expensive commodity and a commodity that.
Well, listen. I met with some people in Seattle who are very charged with this mission. I asked them, and they said, "I think it's going to cost us $15 billion to get out of this problem." I said, $15 billion, like over 10 years? And they said, no, probably over 5. So quantifying how problematic this really is, I'm all for new ideas on how to drive down costs. But, Mr. Cotner, I'm going to give you the last word if there's anything you wanted to add. I saw you had your hand up.
Thank you, Senator. I think your instincts are probably correct after the crash. We underbuilt by about 400,000 houses a year over a 10-year period. There was delayed entry-level market interest because millennials had household formations that were much later in life, and they all hit at the same time. And if you look at the demographics between boomers and millennials, it's significant. So that all hit at the same time when we were building up a deficit just to meet what household formation would be in the future. So I think you're dead on with what you said, and there was a change in the public sector's view of housing, and I agree we haven't had a true housing policy in this country since the 1980s, but the aspiration for single-family home ownership never went away. And that's where all of those things collided, and that's why we have a problem with one group not understanding exactly the significance of the crisis.
I know we have to run to vote, Mr. Chairman, but we shouldn't forget how important home ownership is as economic stabilities for families. And so I hope we can rectify this. I appreciate this hearing, and I appreciate your middle tax policy too. And the chairman and I come from part of the country, the Northwest, who's very plagued. Not that some of you, the Texans and the Californians and others haven't been too, but we have got to step up to this and get some solutions. Thank you, Mr.
Senator
Chairman.
Cantwell, just one comment. As usual, you're spot on with respect to this being all about supply. It's always going to be about supply. I'd also like everybody to note Senator Cantwell's comment with respect to how some of the high flyers used the derivative market back in 2009, and that contributed to some of the market crash problems. And Senator Cantwell, before you came, I talked about private equity and powerful interests now apparently using algorithms to outbid Americans who just want to own a home. So we've got some equity issues to pursue, and we're going to do that in a way that's consistent, as Mr. Conter and I have been talking about, of strengthening this private-public partnership in order to build more housing supply. Lots to do. Special thanks to Ms. Bell for coming such a long way for this and giving us your expertise. And with that, the Finance Committee is adjourned.